Today we are talking about RDSP grants and bonds. I'm going to start by going over how they work in general for high and low income families. We will illustrate this with specific examples. Then we will look at how these benefits are paid out retroactively when you have catch-up room from previous years. To skip directly to the sections, please refer to the timestamps in the description below. There are two types of government contributions: grants and bonds. Grants are distributed based on how much you put in, while bonds are contributions the government can provide, even if you do not put in any money at all. Starting with the grants, depending on family income, the government may add up to $3 for every $1 you contribute. We'll break this down further later in the video with visual graphs to make things easier to understand. So, assuming you have no catch-up room from previous years, you are up to date, and your income qualifies for the highest matching rate, the maximum grant that can be added in a single year is $3,500. To get this, you need to put in a contribution of $1,500. The $1,500 that you contribute is broken down as one $500 contribution, which is tripled by the government, plus a $1,000 contribution, which is doubled, giving a total grant worth $1,500 plus $2,000 equals $3,500. This increase does not come from interest or investing. It comes simply from the grant, which is deposited and paid to you by the government. So if you put in $1,500, the government will put in $3,500, bringing the total value of the account to $5,000. Not bad. As for the Canada Disability Savings Bond, it is even simpler. If family income is below certain thresholds, the government will deposit money into the RDSP, even if no one contributes anything. The bond can be as much as $1,000 per year, with a lifetime maximum of $20,000. Grants and bonds can be received in the same year. This means that a small personal contribution can trigger matching grants while bonds are added at the same time. For example, in 1 year you might contribute $500, receive $1,500 in grants, and also receive $1,000 in bonds. In that single year, the RDSP grows by 6 times in value to $3,000, even though only $500 came from you. The government offers these incentives because people with disabilities often face higher lifetime costs and fewer opportunities to build savings through employment alone. When we talk about how much the government contributes to an RDSP through grants and bonds, one of the key things that generally determines the amount is the beneficiary's adjusted family net income from 2 years prior. For the 2026 year, the government looks at the 2024 tax return. This creates a time lag, meaning if you earned a high income in 2024 but lost your job in 2025, you might still be ineligible for the bond in 2026 because the government is only looking at your 2024 records. The definition of family income changes as the beneficiary gets older. Until the end of the year, the beneficiary turns 18. The government uses the parent's income. Starting the year the beneficiary turns 19, the government switches to using only the beneficiary's and their spouse's income. This switch happens even if the beneficiary is incapacitated or continues to live at home. If the beneficiary cannot manage the account themselves, a spouse, parent, or sibling can act as the holder to manage it, but the money is always calculated based on the beneficiary's financial situation. The income limits for these benefits are updated every year for inflation. For 2026, the key number to get the highest matching grant of 3-to-1, your family income must be $117,045 or less. To get the full $1,000 bond with no contribution required, the family income must be $38,237 or less. And finally, to get a partial bond, the family income must be between $38,237 and $58,523. If income is above $58,523, no bond is paid. These thresholds are published each year by the Government of Canada. To make this more concrete, let's look at how the RDSP grants and bonds work at different income levels. First, consider a lower income situation. Imagine the beneficiary's adjusted family net income is about $30,000 a year. In this case, the RDSP qualifies for the highest level of government support. If the family contributes $1,500 to the RDSP, the government adds the maximum grant of $3,500. On top of that, because income is low, the government also adds a $1,000 bond, even though the bond does not require any contribution. In just 1 year, a $1,500 contribution results in $4,500 from the government, for a total increase of $6,000 in the RDSP. Now consider a moderate income situation. Imagine the adjusted family net income is around $50,000. The grant rules are the same as in the lower income example. So if $1,500 is contributed, the government still adds the full $3,500 in grants. The difference is with the bond. At this income level, the bond is reduced. The government may still add some bond money, but less than the full $1,000. Even without counting the bond, the family's $1,500 contribution still grows to $5,000 because of the grant alone. Finally, consider a higher income situation. Imagine the adjusted family net income is $120,000. At this level, the government no longer offers the higher matching rates. If the family contributes $1,000 to the RDSP, the government matches it dollar for dollar and adds $1,000 in grants. There is no bond at this income level. The result is that a $1,000 contribution becomes $2,000. What these examples show is that everyone who qualifies for an RDSP can benefit, but the level of government support depends on income. Even smaller contributions make a difference. Now let's look at what would happen if you were eligible for the disability tax credit in the previous 10 years, but never opened or contributed to an RDSP. In this scenario, the government allows you to catch up on Canada Disability Savings grants and bonds for up to the last 10 calendar years once the account is opened. Starting with grants, the government will always empty all available 300% tranches before they touch a single 200% tranche. I'll explain what this means in just a moment. The government also limits the total grant payout to a maximum of $10,500 per calendar year until all retroactive entitlements are caught up. Let's look at an example. If you were qualified for the maximum grant of $3,500 per year for the last 10 years, but never contributed, you have accumulated $35,000 in potential grant money, calculated as $3,500 times 10 years. To receive this full amount, it will take roughly 4 years of contributions because of the $10,500 annual payout cap. Let's see how that works by breaking down the tranches. For individuals with a low annual family incomes, there are 2 tranches. The first applies to the first $500 that you contribute every eligible year, which is matched by the government at 300%, giving $1,500 in grants. The second tranche is the next $1,000 that you contribute, which is matched by the government at 200%, giving an additional $2,000 in grants. The total of these grants in these tranches is $1,500 plus $2,000 per year, coming in at a maximum of $3,500. When catching up, the government always pays the highest matching rates first, 300%, then 200%, then 100%, and moves from the oldest year to the newest. Let's look at specific numbers. In year 1, technically you have 11 years of 300% tranches of $500, comprised of 10 retroactive years, plus 1 for the current year. But seeing as there is an annual grant limit that the government will pay, the max you can contribute $3,500, and that will give $10,500 in grants. When you contribute $3,500, it uses up 7 years of your 300% match room. Or in other words, $3,500 is comprised of 7 tranches of $500. This means that if you contribute $3,500 to the RDSP account, you will get $10,500 in grants. In year 2, since you used up 7 of the 11 tranches, you now are left with 4 years of retroactive tranches, plus 1 for the new current year. So in year 2, the total of available 300% $500 tranches is 5. This means that you can contribute 5 times $500 for a total of $2,500. This will use your remaining 300% grants, and your $2,500 contribution will generate grants worth 3 times that, for a value of $7,500. But wait, let's not forget that the max grants that can be paid retroactively in a year is $10,500, not $7,500. So there is still $3,000 of free money to go get, and you can begin tapping into your 200% tranches. At this level of tranches, your contributions double. So if you put in $1,500, you will get $3,000 by the government. So to summarize, in year 2, you put in a total of $2,500 plus $1,500 equals $4,000, which gave a total in grants of $7,500 plus $3,000 equals $10,500. You put in $4,000 in year 2, and that gave you $10,500. Moving on to year 3, you have 0 300% tranches left in your backlog, meaning you only have the single $500 bucket that was generated for the new current year, which gives a $1,500 grant. After using that $500 to get the first $1,500 grant, you still have $9,000 of room left before hitting the $10,500 annual cap. Since this $9,000 must now come entirely from 200% tranches, you must contribute $4,500 to get $9,000 from the government. Consequently, your total contribution in year 3 is $5,000 to pull the same $10,500 in grants. Still, not a bad return on investment. This retroactive feature is one of the most powerful and often misunderstood benefits of the RDSP. The calculation for year 4 is exactly the same. To maximize grants, you have to contribute $5,000, which will give the same $10,500 in grants. In year 5, you enter the final clearing phase, where your retroactive 300% matching room is completely exhausted, and you are focused on consuming the last of your 200% carry-forward tranches. Because a new calendar year has begun, you are granted one fresh 300% tranche for that current year, which allows you to contribute your first $500 to receive a $1,500 grant. After that, you fall back on the 200% tranches, of which you have 3.5 left in your backlog, plus the one extra 200% tranche for the current year. At the conclusion of year 5, assuming a standard 10-year backlog, you will have effectively emptied the tank of all retroactive room. You will have collected a lifetime total of $52,500 in grants, leaving you roughly $17,500 away from the $70,000 lifetime limit. What happens when you are caught up? Once you have finally cleared all the retroactive room from the past decade, your catch-up period ends, and the $10,500 annual cap is no longer relevant because you simply don't have enough unused room to reach it. You then settle into the standard annual routine where you contribute exactly $1,500 to receive the maximum annual grant of $3,500. Or in other words, the $1,500 is broken into $500 at 300% and $1,000 at 200%. This continues every year until you either reach the $70,000 lifetime grant limit or reach December 31st of the year you turn 49, at which point the government stops providing matching grants entirely. As for how the bonds work for the retroactive 10-year catch-up, in your first year of opening the account, you should receive the entire $10,000 backlog plus the current year's $1,000 entitlement as a single lump sum deposit of $11,000 without requiring any personal contributions from you. In year 2 and every year following, you will simply receive the standard $1,000 annual bond for that current calendar year, provided your income remains below the threshold until you eventually reach the $20,000 lifetime bond limit. The RDSP isn't just a savings plan. It's one of the most powerful wealth-building tools in Canada. Consider this. A low-income beneficiary with a 10-year backlog can receive $11,000 in bonds immediately upon opening an account. When you add a $3,500 personal contribution, you trigger an additional $10,500 in matching grants. That brings the year 1 total in your account to $25,000. To put that in perspective, you are looking at a first-year return of over 700%. That is the RDSP advantage. The hardest part of benefiting from an RDSP is not saving or investing. It is knowing that the program exists and understanding how it works. If you're not sure whether you qualify, how the grants and bonds work, or you'd like someone to walk through this with you step by step, I'm happy to help. My email is in the description below. I hope this video was informative to you. Have a great day, everyone.